On Saturday, we just really got the brain going in what is overall taking place here and what this market could do over the next few weeks. Just really talking about the pullback that could come and talking about how, in this environment, we might be in that first stage of, hey, we are walking up into a crash, but we are in the walking up phase right now where we could experience that blow off top type of moment. And we are seeing some big bullish moves happen. But these bullish moves need to be digested eventually. Now, we did talk about over the weekend this coming to these levels, and that's why we are going to look at the shorter time frames, get you guys some weekly expected moves, some daily expected moves. And just a quick note before we get started, we do have a private stream for Patreon members. Patreon members, make sure you pay attention to 10 a.m. Central Time because we will have a private stream. Look for the link on Patreon if you would like to join. The link's down there in the description. Other than that, guys, I wanted to get into a couple topics before we get into that technical analysis, so let's get started. The first thing I really wanted to talk about were just a few topics that I think we can kind of flow through pretty quickly here. The 10-year yield did see this major spike. Now, if you didn't know this about, say, tariffs, right, the Trump tariffs, they will cause a spike in inflation, but that spike in inflation should be overall what? Transitory, right? Like this time, it really should be transitory. The time where it isn't transitory, and most of the time it is more so along the lines not added up to this type of situation. But in 2020, we accepted those costs. So big businesses were able to make big margins and we kept paying and kept paying and kept paying. So if you really want prices to get cheaper, you're going to see with these tariffs that these companies like Walmart, they're going to raise their prices by 240%. You're not going to be able to afford it. Your money will talk, and then they'll have to eat that margin. That is most likely what is going to take place there. So this 10-year yield actually, though, looks like it really wants to turn around, and we're starting to see this spike up. So are we going to see that bit of inflation come into the market, and could that cause a disruption during this summer run? I think it's very interesting to look into this towards July, but this does mean that as the 10-year yield is able to curl up into positive territory, it can take out this high and make a new one. So we will be watching this very closely. Now, a lot of people are talking about rate cut, rate cut, rate cut, rate cut. I'm going to just show you guys real quick, like, this right here is just a very good thing to have. It'll just kind of keep you mellow about it, kind of just give you a dictated like, hey, everyone's shouting rate cut, everyone's shouting rate raise. What is on the table for this month? And you have a 97.4% chance that nothing changes, right? When does this number start to increase? Does it really increase for a rate cut in July? Not necessarily. You're still at 83%. But when do these numbers flip? It flips in September. So weirdly enough, September is where we can see some kind of rate cut. That is where you should probably be leaning towards. And what might happen here is we might see kind of a Fed freak out over the summer. This is that downturn that we're talking about, right? Over the weekend, we talked about on the SPY seeing something like this take place. Oh, I got a game. Oh, Expedition 33. We talked about something like this taking place, or even this into this taking place, where people really get fearful down here. And then maybe they actually end up celebrating some kind of rate cut. I don't know if that's going to be the situation, but we'll have to see how it pans out. But it is good to have that little tool that is the Fed Watch there if you really want it. And I'll put it in the stream later if you want to come to the stream later for Patreon members so that you can get that link. Now, the next topic I wanted to talk about is why would this market overall continue going up? Well, if you notice, we had a little spat between Elon Musk and Donald Trump. So that little spat, we actually got some good things from Elon for a second here because he pointed out some very obvious things. There is continued overspending in this bill. Yes, it does have some tax cuts. Yes, it will cut things by like 1.7 trillion, but overall the spending is continuing. And I think that's what he's frustrated about. Well, and then he got frustrated when his contracts got threatened, right? We can all acknowledge that. But for Elon, he showed this. Flatten the curve. Let's flatten the curve. Well, when are we going to flatten this curve? This is our national debt. And if you really look at this, you can see how our national debt rises and what else rises with it. Well, go to a weekly chart and zoom out for a sec and say that spending is not what keeps the market going up. So what you really want to pay attention to in all of these times are, hey, even if we go through something ugly, is spending continuing? Okay, we go through something ugly, is spending continuing? Because if spending is always going to continue and we're just going to keep going into more and more debt, well, you could run into some big problems down the line and run into a depression later on. But for the time being, we could say that the problem will continue, and it can continue as much as they like until something breaks in the system. What I'm explaining to you right now is why this irrational thing is kind of happening and how it could make sense, and also why we could see an irrational type of crash moment where everything looks awful and you think that this market should go down to 300 for the SPY, but the market ends up turning around because of that increase in spending. So that is just something I wanted to point out. Now let's get into those shorter timeframes and really take a look at the weekly and daily expected moves. Let's just go ahead and shout those out for the SPY. Here, I'll even put a thing up here so you guys know, hey, we're on the SPY, okay? Now, the SPY here going up and up and up, able to go through the center point, right? These are a lot of things we talked about yesterday, but we're still looking if in any way we can make like a divergence or something like that. So let's really read into these weekly and daily expected moves. I'm just going to read them off real quick. Weekly expected moves are always in purple. That is 610.07 to the upside, and you have 588.21 to the downside. This right here is a 68% zone that is priced in using the options data. So the options market, or the market itself, really only expects us to get to something like 610 or 588 this week. If you see something unexpected in here, you can get bigger moves, right? If we get something unexpected, that kind of changes. If we ever see some kind of news come out, you will see us like posting, and we post it to Patreon. We show it off during the live show. That second standard deviation is your 95% line, as this is a 68% zone. So you land in there 68% of the time. It's a really, really good tool. For the daily expected move, same rules apply, right? This is a daily expected move, 68% zone in there. You do have 603.73 to the upside. And for the daily expected move in red, you have 594.55 to the downside. Very, very cool. Now, we're going to read into these daily expected moves in a little bit different way, right? We're going to look in those shorter time frames and say, okay, the 2-hour chart. What do we see from the 2-hour chart here? We see that the 2-hour chart is not necessarily overbought. We see that the 2-hour chart was able to go to the upside. We also see that the 2-hour chart is continuing to hold forms of divergence here that could prove to be a problem. Now, these are starting to get extended, so I don't know if a 2-hour chart is the best thing to read into, but I definitely think a 4-hour chart curling back down and kind of hesitating in this area, you're getting some weirdness with your signals, which usually means what? Watch out for the market to do something irrational. Now, we did leave a gap behind on, say, Friday. So we did leave a gap behind. And so what we'd pay attention to for the 2-hour chart is if we're going to need to really reload this, well, we don't necessarily want to start that chain reaction down. But if we were going to, go to an area where we could bounce, we would look for that 2-hour to pull down into 588.21 to the downside, right? If you're only pulling down to this type of area here, well, then it'll look more like a 30-minute pullback. Now, what do you see from the 30-minute that's a problem here? Well, the 30-minute is truly like most of your signals are saying, we need to go down. 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 That is what signals are saying. I just showed you the 2-hour. I showed you the 4-hour. Those all have divergence right now. The daily scale, it's overbought territory, and we're scaling up very fast. We haven't seen a daily pullback really. So a lot of these signals are saying down, 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 down. But the problem here is trying to call when that comes down can be difficult. Because right now, overall is saying, hey, look at the price action. We have the 30-minute that made a new high, but possibly making a lower one right here on, say, a shorter time frame. So that could mean we're in some kind of downtrend, which means we could confirm this bad boy down on the MACD for our technicals. And we see divergence on the MACD. We see divergence on the RSI, which means something here. This means that the most probable thing in this area with the information we have from our signals is if this is able to confirm, then the 2-hour should be a pullback, if not some kind of unexpected thing that starts some kind of downtrend. That is actually the more probable thing here. And I know that's crazy. But one thing we need to look out for is potential news. Because remember, just a couple weeks ago, we said Donald Trump and Bessent, they said they have good news for us in the next 2 to 3 weeks. Well, guess what? It's 2 weeks' time, and the market's hanging on by a thread. So if you can get some random news here, we can extend this for quite some time. So what I think is going to take place, if you wanted my opinion on this, is we are actually going to curl down on the 30-minute into the daily expected move, and then we are potentially going to set up for Tuesday if we're going to get some kind of news. If that news never comes this week at all, then I do expect some kind of pathing like this, just so you are aware. But in this area, I think the best thing to say, as you know, the SPY is pretty simple in this area, actually. It's just look for the 30-minute, right? Look if the 30-minute curls down, does not lose this low, and then curls back up into positive territory. And we will be watching this stuff live with you on Monday. But I wanted to make sure to get through some of these things because it is a time where your signals are saying we are so tapped out. But you always want to be looking for a piece of news that just completely ruins that timing if you're trying to call some kind of top, okay? Let's go over into the Qs and kind of double down and look at some of those moves as well. For the Qs, I like to do things kind of forwards for the SPY and then backwards for the Qs, if you notice, just to show, like, you know, some people might prefer it in a different way. So I like it both. I mean, I can do it either way, but I just really like it. Really looking from the 2-hour perspective and then going into my 30-minute, to be honest with you. But people like it different, so I'm going to show a difference as well. We will notice here that the Qs as well. Do you see how really just like market structure is adding up to there is extreme weakness here? You notice that the SPY was able to go to a new high, go to a, well, not relatively new high here, but go to a new high, right? But the Qs were not able to go to a new high. Do you know what that is? I mean, this is what you want to see on the daily time frame for like a crash, a correction, okay? And now you're seeing it on the 30-minute time frame. You're seeing it on the 2-hour time frame, right? A rejection here from those sellers as of right now, not cross below a line or anything like that. But this just means to me, the market overall is really, really tapped out. And what we're going to potentially see is kind of that big bursting FOMO move with some kind of news. If we do not see that to continue this, then overall, this is going to tip over and we are going to get our daily pullback, okay? But I wanted you to see that from the SPY, you were able to go make that new high. The Qs, you were not. So this is kind of behaving like a top right now. So that means as of Monday, if I'm in the Qs and I see this 30-minute curl down and lose that low, I might want to be risk off in case no good news comes and this starts to break down to here and curl back up and completely see something crazy, right? Right? I think that makes total sense. But if we get good news somewhere around this type of level, because this is the most probable thing for Monday, if you didn't notice, this is the most probable thing for Monday to dip down into those buyers and then see if we're able to curl to the upside unless we get some kind of news. We'll see if that ends up being correct. The most probable thing does not have to play out every single time, even though it, weirdly enough, it had been like a month ago. So if the 30-minute can curl down, where are we paying attention? Well, daily expected move. So to the upside, 535.13 to the upside. We have 524.71 to the downside. Remember, 68% zone for the day. That means if the Qs come down to this area, it's a very likely area to bounce, and you'll probably like sit there a lot of the day. A lot of the time with these type of markets, with all the dark pools, with the lit exchange smaller than the off-market exchange, you are going to see like a big move here, and then you'll kind of just like diddle around, and then you'll see a big move at the end of the day, right? Or a big move at the end of the day. So that's just how these markets overall work, and then you're going to see a big move in the morning. That's what's been happening lately. That's what I've been noticing. Maybe you've noticed it too. But this means that for Monday, a 30-minute pullback down to 524.71 would be a good thing if we're able to catch some bounces from there and able to go make a high above this one, because you're not losing this low. Once we lose that low, we'll talk about it further, because that could mean that you're in a 2-hour pullback, right? The Qs have those divergences multiple point, but you have this wave in it that really suggests like, hey, we could still continue. So the 2-hour is still saying like, I'm tapped out, but there's a way I can continue. The way it could continue is get down by that center line, right? Retest into this zone, right? Remember this zone that we created in here that we just broke out from? We created this little zone right here. If you really pay attention to this, you're going, okay, we already dipped into that. We don't have to go again. But if we wanted to really reload and use this kind of liquidity in here, we could shoot this down and then potentially be able to buy this thing back up to do what? Create that head and shoulders in this area. I think that would be very, very interesting. So for the most part, as we read off weekly expected moves for you, 542.16 to the upside, 517.68 to the downside. We're overall early on in the week looking for a 30-minute pullback down to the daily expected move. And if that's not enough and we don't see any kind of good news, then we're looking for the 2-hour pullback down to the weekly expected move. And if you don't get good news here, you want to be watching out for rejection, because this will be eerily close to the center line around this timing over here. And that's where we could see some bad things. And guess what? That goes into the week of expiration. That goes into the week of options expiration for the quarter even. So it's going to be a big time to pay attention. So just to clean it up at the end of this video, as of right now, the most probable thing for the market to do on Monday is see some kind of 30-minute pullback to the daily expected move, and then see if we get some good news to produce that to the upside and remain positive, right? If we can switch this thing back up, even if it goes negative for a bit, can we end up positive by Tuesday? That'll be a big deal. And do we lose this low to actually get deeper into this zone? The other thing that we're just being aware of is if we're going to see more than that, how can this still remain irrational? Well, the 2-hour could retest back into this zone again and be able to just do something irrational with some news. Now, if you're going to see major risk come into the market, you are going to start to lose critical lows like this one way down here towards 511, 512. The VIX will be interesting because as of right now, you have a 2-hour divergence formed on your MACD. You have a 2-hour divergence formed on your RSI, but it is not confirmed. This is not confirmed. So when you get this type of moment, you don't want to say, oh, this is going to confirm. If you're going to do that, right, I think volatility will pop up. I just don't think it'll be for a little bit. But if you're going to do that, you at least want to wait for confirmation or be looking at shorter time frames. And right now, do you overall see a 30-minute divergence for volatility? Someone was overall asking as well, like, hey, do you include an extended divergence? And this is why I'm including that, like saying, hey, this is kind of an extended divergence. Maybe it's kind of not even there on the SPY, because something like volatility is a pretty good example. You see this divergence here, it pops, and then it just completely fails. And you go, okay, now there's divergence across. Nah, not necessarily at this point. So what we would want to see here is actually this to rotate up, dink off into this area right here towards that 5-day moving average, and then actually curl down into negative territory. Now around this time, if we see a divergence here, that's when I'll be paying attention. But I think we could see potential news where you see a 30-minute pullback, maybe even a 2-hour pullback, and then volatility is able to curl way down. I'm talking like it wipes out any divergence here, and then we'll create those signals later on for our 2-hour pullbacks and for what overall will lead us into some kind of top where people really get shaken out in this crash narrative where the Fed potentially has to react. That's why I talked about it at the beginning of this video. The Fed potentially has to react by cutting rates in some way, even when inflation is actually, transitorily showing, hey, we're going up because of the tariffs for now. It should not stick. So for volatility at the moment, the daily time frame could make a divergence, same as the SPY. If you really look at these MACDs back to back, you're like, man, that's a weird look for your MACD. Well, look at the SPY. That's a weird look for your MACD. It's very, very flat. It's very squeezy, right? So if volatility is going to pop off and look exactly identical to the SPY, this is going to be fantastic for us. Because if we see a divergence on the daily scale from volatility and the SPY at the same time, or later on, if we see a divergence from the 2-hour scale on volatility and the SPY at the same time, as they're behaving very well together right now with the signals, we can read into it and we might even be able to call some kind of top. Now, where are we looking? Let's remind ourselves what we're looking for in June overall. Well, what areas are we really looking for a big daily dip? We are looking for 560.77. What areas are we looking for some kind of top towards June 20th? Well, 618 to the upside. We can really utilize these monthly expected moves and just tell us, hey, where are the decision-making areas? If I'm bullish, well, then this month, if you get to this area, it's going to be a big deal to make a decision. And then you would say, what if I'm bearish? Well, tough spot for you because things have been holding up very irrationally. So I'm sorry if you're a bear here. I understand how you're getting bearish and maybe building some kind of short position for the longer term into, say, like August or September. But for the most part, this could continue for a long, long time, guys. So just be aware that this can continue for a long time because getting bearish too early, trying to call a top. Just wait till you actually see price action tell you that it's going to drop. That would be, hey, we're going to go down to here, we're going to react up and then curl down. So decision-making areas at our yellow lines, very, very nice. We now have some form of thought process towards this week. Hey, yeah, 30-minute pullback looks the most probable. Maybe for day traders, that'll be an opportunity. 2-hour pullback is very possible as well. We want to see if that continues some kind of downtrend move to see something a little crazy and break this low. But for the most part, this market can do irrational things. And for the most part, your signals are saying we are tapped out, but we want to look out for that news that Trump and Bessent actually hinted at, as everyone is right now calling for a crash. I believe we need one more move to the upside in the next few weeks, maybe even going into mid-July. We just see upside into mid-July to really convince people like, hey, this market cannot go down. And that's exactly when it starts to go down, okay? Hey, thank you guys for watching this video. I really wanted to make sure to get you guys those weekly expected moves, daily expected moves. If you would like to join us for the live stream in a little bit, it's private, it's for our private community. If you would like to join, it's very, very cheap. It's $7, it's only $7. It's like a nice cup of coffee a month. And if you just wanted to join this time, you're never locked in. You can just come hang out with us for this time. And if you like it, you can stick around because we're going to do more private streams over there, especially in July. So today will be a good tester for you. Thank you guys so much for watching this video. I wish you nothing but luck this week with your plays, but make sure to not use all luck in your plays, right? Make sure you're using your skills, right? There is a little bit of luck to it, but you don't want to depend on luck alone and just YOLO stuff, right? We want to be using our skills. We want to have our 5 reasons to take a trade, and we want to be trading like water, meaning managing risk, making sure we're paying attention to position sizing as we could be walking into a top, and signals are kind of suggesting we're topping now until we see that good news. We need to be really considering our management of risk here and understanding a time where we could be wrong. And so if you're going to be wrong, have a plan for it in your trade, right? Acknowledge that stocks do not have 100% probabilities on anything. There's always a chance that a car could come out and hit you when you're walking to your car, right? So that's the 1%. So always be open to being wrong, and that will really unlock you as a very mature and manageable trader. Thank you guys so much. Have a great day. Have a great rest of your Sunday, and let's get locked and loaded for tomorrow. Peace out.